I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
The world is full of red arrows as Asia gets hit the hardest. The Nikkei is down 4% as the yen hits a 6-week high. A sell signal flashed yesterday when the 1700 level couldn't hold. Is this the start of a corrective phase? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing red arrows around the world, with Japan being hit the hardest after 2 Fed officials said the central bank will likely begin tapering in September. But this is what we've heard all along, Scott, or at least for quite some time now. So why the harsh reaction?
I don't think it's because of that. It might be a mixture of a few things. China, still you're getting some negative headlines. You're still getting these terrorist headlines. And then the talk of tapering back and forth, combine that with August after a 5% move in July on top of a 19% move that we've seen for 2013. And it makes sense that some people are looking for some clues to take some risk off, or maybe even some signs to, put on a cute short or two in order to, make some money to the downside. But ultimately, things are still in check. It's just a matter of your time frame.
Well, you mentioned that keyword clues, which I want to get into. But before we do, why don't you show us the levels you're watching in the S&P?
Okay, well, yesterday I talked about that pivot to get above, which was 1700, and we crossed back below. So if you look here at the chart of the SPX, you will see short term. Okay, first of all, here's a trend from November that comes all the way up. Here is that most recent move after that 6% correction we saw in May. That's been very spirited. We went sideways for a while, and then we broke above the psychological level of 1700. So I would say you take a closer look there. If you're an active trader, kind of like me, you could have been cute. You could have said, okay, if we break below 1703 to 1698, let me take some risk off. Let me maybe get short the spiders, somewhat like I did, and see if we can get some kind of corrective activity to at least the 21 days. So yesterday, your first downside, today a little follow through. So the question is, do we hit the 21 day, go sideways, and just continue? Right now, I would say if this is like a football game, and the Bulls have been dominating, and finally the Bears have a set of downs. And if they want to get another set of downs, they better keep the S&P below 1698 to 1700 for a few sessions, because if we reclaim that, it's the Bulls ball back, and they might as well take a hike like they've been for the past 2 years.
Solid couple metaphors there to start off our morning. But you mentioned that keyword clues. So what are signs that we can look to about what sort of retracement this will be for August?
Well, I think 2 sectors that we'll watch, one of them being the home builders. Home builders have been weaker for the past, I would say, month or so because of the potential of rising rates and people saying how it's going to derail housing prices with mortgage rates perhaps over 4.5%, but I don't think that's the case. But anyway, you look at the home builders and you'll see yesterday we talked about the potential of it breaking above 31-ish. And what happened? Potent down day. So with that said, it's still wedging. Okay, you still have this pennant, so direction is unknown. If we were to break below this area, below 29.35 and head lower, I would think that would also, bring some downside movement to the market. You look at the financials, which is also another spot for leadership that have been very strong. You look at 2 different trends. This has been nice to the upside. Then you had the first corrective activity, a new move to highs, and all we are within another pennant. So do we just consolidate up here, and go sideways and then make new highs, or do we break the 21 day and head down to the 50 day? So that will tell us whether or not this downside is very muted or, it gets shaken up a bit. So I would watch both of those sectors. That could help, besides the individual price action.
Well, in this choppy tape, there are stocks that could be pressured, stocks that are showing relative weakness that could be better potentially as shorts. And IBM is one stock that's been showing relative weakness.
Yes, IBM got downgraded yesterday. That was part of the reason why the Dow is down more than some of the other indices. And if you look at the chart, I technically think it has some problems. If you look at the peak here and then the high and another lower high, first of all, this trend line, which wasn't complete, you could follow it all the way up. It was broken and somewhat retested. And then back here is when the S&P made new highs above 1700. So right here, not near there, so a little relative weakness. And then here is big support. So if IBM were to break this macro support, because that's where it's at now, around 188, chances are it could see 180 pretty quickly and then maybe even down to 170. So if that were the case in the next few sessions, that could be a negative impact on the Dow and also on some investor sentiment. So I would watch IBM, and if you're a long-term investor in IBM also, I'd be just a little careful. Look at the run that it's had, look at the support it's here. I think be a little protective there.
And take Caterpillar, a weaker stock all year in 2013, and another name that's near macro support. Does it break?
Well, that'll give us clues too. Can these big behemoth stocks get down, like macro downside? Like, it's one thing to be in a corrective phase during the course of a year, but then it's one thing to break macro levels. And if you look at Caterpillar, you will see that it hasn't been a stock to go to this year. Here's your high, lower high, lower high, lower high. But now you have long-term support. This long-term support comes in between 80 and 80, I would say 80 to 82. It starts breaking below 80. Your next support level doesn't come into about 65. So if Caterpillar is that weak, there will be some bears pointing to that, and it could be, potential fuel for that negativity.
Well, while we're talking cat, might as well talk about Deere, which has been acting slightly better than Caterpillar, but doesn't look good either. No,
at this point now it's below all the moving averages. I hate to play stocks from the long side when they're below. I like them when they're above. You look here at the chart, it was stronger, but it seems like it's finally starting to give in. Here's your high, lower high, lower high. Here are all these, moving averages curling down. Here is your support here around 81-ish. So if this were to get below 80 and break below it, you could see a move in Deere down to at least, this 75 area, which again, this is a big stock. Market watchers do watch it. So I would be a little, hesitant, or watch. It's not even hesitant. Just look to see if this were to go. Could have a shorting opportunity, or it could just give you some clues of more weakness to come.
And another big name, Microsoft, which had a big gap down on its last earnings report. How weak does this one still look to you?
Well, this one, it showed how quickly something can change complexion. This was a strong stock for the majority of the beginning of the year with Intel and some others. And then finally, the true weakness in the PC sector started to show its face. So anyway, I don't take stock into earnings, and if you didn't, it actually met the target. We were looking for, I think, 34 to 35 this year. Went to 36. But anyway, big gap down, okay, and now it's wedging. So right now, nobody thinks it's on sale between 35 and just say 32.66. So if Microsoft were to start to break to the downside of this wedge, okay, that could bring out some more sellers in technology and in Intel and some of the PC guys. So, if it were to, break to the upside and spent enough time here, chances are, some of the downside would be muted. So I would watch these four names, for opportunities, both ways, and also for little clues on, the type of market composure we'll have in the next 4 to 6 weeks.
All right, well, we're not going to leave the bulls out. Coming up, we're going to go in the trenches with stocks that are acting well and could be buyable. But first, this quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with stocks that are acting well in this tape and could actually be buyable. Starting with eBay, which had a nice move yesterday that brought it back above all key moving averages since the big gap down it had on earnings on July 18th. So is there opportunity here?
Well, if you want to buy a stock in the bottom end of the range, it's a good one. Also a stock that showed relative strength in a weak tape yesterday. So it had two ingredients that keeps it on the radar as something more bullish than bearish. You look here at the chart, you will see this is the bottom end of the range. This is support that's been holding for a while, since last November. So this has been a huge accumulation process. You want to take a closer look here. Yesterday, a lot of guys were talking about on the VTF, they got a nice little day trade, which came in right around here when it cleared this 53, and now you have this earnings gap. So I would say the longer it stays above here, the higher the percentage that you can get a nice trade into the gap. And then at some point next quarter, because this quarter wasn't that blockbuster, maybe it breaks above this 57 for new all-time highs. But at this particular point, big consolidation. I would trade it long versus 51. A move below 51, I'd get out of the way.
Big example of relative strength, LinkedIn, which had a big gap up on earnings and has been holding above that gap.
Yes, and this one has just been a hero. For the last 2 years, if you bought this, after it came, if you bought it the day of going public, you made money. If you bought it in that cup and handle base, you made money. If you, however you approached it from the long side, looking where it is now, you have to be a LinkedIn fan if you bought the equity. But anyway, with that said, you look at the chart now, and you will see, you have another big gap after earnings. So it's holding here. Yesterday did show, small relative strength. So I think as far as a trade, okay, you could trade long versus this gap, and the gap starts at 228, or you could wait for it to start to get above 235. If it starts getting above 235, then you get some momentum. So this, I think, will be on all active trader radars the next day or so to see if you can get some follow through.
And like LinkedIn, Facebook has also been strong, also had a big gap up on earnings and has been holding above that gap as well.
Yes, and this one has been a trickier stock. Everyone likes to talk about it. Everyone loved to beat me up when I was talking about, the highs of the year not being in when it was in the 20s. But anyway, if you look at it now, had to get that in there, because when that Barron's article came out and they said 15, I had a lot of red dog, put your head between your legs. But anyway, with that said, this was the pattern. I know it was a little bit sloppy, but here is your cup and handle pattern. Here's the cup, and here is that downtrend that it broke above and ignited on the earnings. And then you also had a nice, tradable move after earnings, which is what is important. So you look here, this was the trigger after the 2-day consolidation, after holding the gap. And now yesterday you had a down day. So I would say use yesterday as a point of reference. The longer it goes sideways, the higher the percentage. I think that we can get a nice trade above this area, which yesterday's high was 39.32, or 2 days ago, to get north of 40. I do think we see north of 40 this year. Question is, will it stay in this little flag, or can you steal it down here at the 8-day closer to 36.54? So this is a strong stock to keep on the radar.
Excellent. And we've also talked about VMware, continues to show relative strength. What do you think about this? Where could it be viable?
I was in it yesterday, and just when we broke that S&P level, I got out of stocks that I really don't have committed to, but I'll watch it again today. You look at the chart here, it's building. It's building above the gap up, and chances are at some particular point for a trade, it gets above this pennant. So gap is still intact. Moving averages catch up was green yesterday when most things were red. Above 83.50 on volume, you can get an additional move. Again, this group was somewhat of a laggard group this year. So look where it was on that gap up. So it's kind of like stuck in space here. So, as long as it stays above this gap, it's in the game. Hopefully at some point it gets momentum above this and fills this gap, which is so many gaps in the stock, all the way up to, wow, this was about 95-ish.
All right, well, time for some quick hits here. How would you approach Google, which has been very choppy and seems to be still looking for direction?
Google is tough because yesterday it looked like if we were going to stay strong, okay, it had the potential of getting above 907. Yesterday it broke above 907 and it failed. So with that said, if you tried playing it for momentum, if you've been in Google for a year, 2 years, this and that, I think you're fine. If you're playing it for additional gains, yesterday it tried to get above this 907 and failed, closed at the low. So hopefully you got out of it. Now the question is, can it hold this trend line? So at this particular point, it's got to stay above this like 889-ish or even 880. If it starts getting below 880, chances are, you could see this moving average, and that would mean that tech is getting a lot weaker. So I would watch this one close for some clues on market direction as well.
All right, how about Netflix, which did show relative strength yesterday, closed well off the lows. Is this going to be on your radar for continuation today if the market continues to hold?
Yes, typically a strong stock like this was yesterday. On a down morning, you want to see if it's down, it can go negative to positive. And this one, 2 days ago, came out with a strong, move after Barron's kind of bashed it, which lately Barron's just been bashing stocks and it hasn't been working that way. But anyway, with that said, look at the chart. Okay, this was the line in the sand, so to speak, 240. This was when it tried to get down, couldn't break below, engulfed it. Yesterday, another day. So at this particular point, macro investors are involved, and you have Carl Icahn in there. You have a tremendous move, and it's still trending and still going higher. I think guys are getting much more rewarded buying this thing versus trying cute shorts. And today, if it is negative, maybe it goes positive. If it gets above yesterday's high of 257.60, it can continue.
And how about Amazon, hovering around the 21-day and did hold upper support of 297 yesterday?
I think this one's kind of in the Google camp, where it's like holding on to the lower end, and if it were to break that lower end, it could be a little bit of problem. So you look here, you will see that this is your major support. If it holds it, it stays constructive, and then at some point maybe it breaks above this lower area. So I would just make sure if you're in this thing for the short term, stay in it. If it holds this 296, 297, if this were to break, get out of the way, because we could see a test of 286. So I'd watch this in Google. It's the same type of scenario. And one more that I just want to forget, is Apple. Apple has been acting better since earnings. And you look here at the chart, you will see, a spirited move after the report. You had that gap up that held, went sideways, cleared this trend line. And now yesterday, your first down day, I'd say we get a few more. I think that this 456-ish area would be great to buy the dip, and then that'll be somewhat where people will be looking for, really good commitment. But then it could also maybe trade back down to this trend line, and that's 444. So I would watch this as well.
And we talked a lot about Scott's thesis for 2013 about going long the TBT in the face of rising rates. It is now flagging above its 8-day.
Right, and it's still there. So the question is, if you have it in the drawer, keep it in the drawer. I do think we're going to see higher prices, just how they get there. And if you look at the chart, sometimes it's just really choppy, okay? And at this point, this trend is still intact, okay, looking really good. But, it's like red day, green day, red day, green day. It's like that game you played when you were a kid, red light, green light, 1, 2, 3. But anyway, at this point, at some point, I do think it gets over the highs of the year. If you're in it for the short term and it were to break and close below the 21-day, maybe that means that things are starting to slack as far as data out there. But anyway, I think that it's still in its risk range and looks good for higher prices. And this pivot is that pivot, which is 78.63.
And lastly, one of Scott's favorite names, Tesla, reporting today. After the close, how will you be approaching it?
You know what? I've chosen to do 4 option plays, and we're 3 for 4, which is good. Okay, I think I had Google calls that went worthless. I had Apple calls that were good. Facebook was like a lottery ticket, and LinkedIn was a nice call spread. So people like, Red Dog, what are you going to do with this? So you can have some kind of option strategy into it. And I think I'm going to pass on that. I'm just going to trade it potentially after hours. You look at the chart, you look where it came from. This was before the last quarter earnings. This was last quarter earnings that ignited the stock. Since then, unbelievable trading vehicle. Actually a nice two-way action too, mostly obviously to the upside. So up here near 140, it's somewhat priced for perfection. 20% short. So if they do come out and it's blockbuster again and it moves above this 145.73 and you're flatted, I think that's where traders will get in. As long as it stays above that, you could see another stretch here. But again, it's going to have to be good for that to continue. Ultimately, I think that this stock and this move is not done. If you're an investor and you've been in it, I think the group, the industry, Elon Musk, they have a lot of room for upside. So stay the course. If you want to have some puts on or put spread just in case you're long the equity and you want a little insurance, little insurance costs you some money, but it's always good when you have it. I need it.
Well, clearly there is stuff to do out there on both sides of the coin. So what will you be focusing on as you start the trading session?
Well, I really come in pretty flat. I'm short the spiders. So, and I have IBM puts, so I'm going to see whether or not, we pull into the 21-day. If we pull into that 21-day, I know I probably will have covered my spiders, and I'll be looking to see if I could buy quality longs that are showing relative strength. Like we said, there are some setups out there that still look good, even in a choppy corrective type environment. If we just go positive today and reclaim 1700, it's probably going to force me to get back into 4 to 7 positions, which I was hoping it doesn't do, because I'd like to relax a little bit in August, considering the activity that was so great in July and June, and and so active. I think traders would like to be in the beach or in the mountains,
yeah.
and even like performance managers, they out there, they'd like to not have to keep up with the market that's now 19%, that could be up 23%. So with that said, bears, keep your set of downs, go for one more, make a little charge down the field. Don't give the ball up so quick, so this way we could have some volatility and traders can trade and we don't feel compelled to have to be in every single day in order to keep up with things.
And that's your morning call for this Wednesday. Happy trading. Have a great day.